Welcome back to Market Mindset Pod. I'm your host, Big Money Mike, and let me tell you, the market is serving up more twists than a daytime soap opera. Today, we're talking AI's insane spending war, because apparently, tech companies have money to burn. Meme stocks are back, and if you thought you'd seen the last of GameStop, you were wrong. Trump's tariffs are coming for Barbie. Yes, even your childhood toys are not safe. And of course, today's stock pick, an underdog with serious upside. Let's get into it. All right, let's talk AI. Alphabet just announced a $75 billion investment in AI infrastructure, which is $15 billion more than Wall Street expected. Investors, naturally, freaked out and sent the stock down 8%. Meta and Microsoft, meanwhile, basically gave a hold my beer response, confirming they're doubling down on AI infrastructure too. Nvidia and Broadcom, two of the biggest chip suppliers, saw a quick bounce back after recent concerns that cheaper AI models, like DeepSeek's, might slow demand for high-powered chips. So what's happening? Big tech is all in on AI, but investors are nervous about when they'll actually see a return on these insane spending sprees. Nvidia and Broadcom remain AI power players, but competition is creeping in. The AI space is basically a gold rush, but right now, everyone's still buying shovels. If you're holding any of these stocks, keep an eye on upcoming earnings. This much spending means someone's going to have to prove their AI actually makes money, soon. Just when you thought meme stocks were dead, they rise. GameStop GME shot up 40% overnight, all thanks to a single cryptic tweet from Roaring Kitty, the guy who kicked off the original short squeeze. AMC followed with a 35% jump, and somehow even the bankrupt zombie ticker for Bed Bath & Beyond got in on the action. What's fueling this? Retail traders on Reddit are back, and they're gunning for short sellers again. Options trading is through the roof, which could fuel another squeeze. There's zero fundamental reason for these moves. But when has that ever stopped meme stocks? If you're looking at this and thinking, maybe I should jump in, just know you're playing in the Vegas casino of the stock market. Enter at your own risk. Imagine walking into a toy store and seeing Barbie marked up like she just got listed on the NASDAQ. That's what Mattel is warning might happen, thanks to Trump's latest 10% tariffs on Chinese imports. 40% of Mattel's toys are made in China, so they're now scrambling to move production elsewhere. They plan to shut down at least one Chinese factory by 2027 to reduce exposure. Despite all this, Mattel's stock is up 15% because Hot Wheels sales are carrying the company on their tiny plastic backs. For investors, this is a classic short-term pain, long-term strategy moment. Mattel's got a strong brand, but supply chain moves take time. If you're holding, patience is key. All right, time for today's stock pick, RXO NYSE, RXO, a freight and logistics company that's got some serious upside. Here's why RXO is worth watching. They just integrated Coyote Logistics, boosting their freight brokerage business. Managed transportation is booming, with a sales pipeline nearing $2 billion in freight under management. Even in a soft freight market, RXO grew last-mile delivery stops by 15% last year. Yes, they just posted a $20 million net loss, but here's the kicker. Adjusted net income actually beat expectations. This is a company investing in long-term efficiency, and Wall Street is finally starting to take notice. Not saying buy, but keep this one on your radar. That's a wrap on today's Market Mindset Pod. We covered AI's spending war, because big tech has cash to burn. Meme stocks making an insane comeback, because history does repeat itself. Barbie facing a tariff crisis. Mattel's strategy is one to watch. And RXO, the freight company making big moves. As always, stay sharp, stay hungry, and stay in the mindset. This is Big Money Mike signing off. Catch you next time.